Do you have an IRA or 401k? You might think of this as being your money, but don't forget you still have to pay taxes when you withdraw this money in retirement. And you could be paying a lot more taxes on these accounts than you know. So here to talk more about it is Jason Biance from Biance Financial in Jacksonville. Jason, thank you so much for being here today. We could be facing massive tax bills in retirement, couldn't we?
We could, David. And you've probably been contributing to an IRA or 401k for years, if not decades. And you've gotten some nice tax breaks along the way. But remember, you'll still have to pay taxes when you withdraw this money in retirement. So this is really a joint account. But instead of a joint account between, say, you and your spouse, it's a joint account between you and the IRS.
Oh.
And if you knew how much you'd be paying in taxes on these accounts in retirement, your jaw would drop because it could be a massive number.
So, why could we be paying so much in taxes on these accounts? What's up with that?
Well, David, that's a great question because most people think that they'll be paying fewer taxes in retirement.
Right.
And we understand that because you're no longer earning a paycheck, right? But when you start adding up taxes on withdrawals from your IRA or 401k, taxes on your Social Security benefits, taxes on your investment income, when you add all of that up, you may end up paying more in taxes when you retire. So what does that mean? The money you were counting on to help pay for things in retirement could end up being a lot less than you thought it was going to be.
Whoa, and that could be a pretty huge wake-up call for a lot of people, right?
It could, David, and unfortunately, the situation could get even worse. Many people may not be aware, but federal income tax rates are at the lowest level they've been for the last 40 years. At the same time, our national debt is at an all-time high at more than $34 trillion, and get this, it's growing by more than $1 trillion every 100 days. So, everyone knows money doesn't grow on trees.
Right.
So the only form of revenue for the government is taxes. So that's why many economists and tax experts are warning higher taxes could be just around the corner. And if you're retired or recently retired, it couldn't be a worse timing for you.
Right.
Because these higher taxes could take an even bigger chunk out of your hard-earned savings.
Oh, well, that does make sense. So, how can our viewers learn more about these tax planning strategies?
Yes, David, it's not all bad news, right?
Oh, good. Okay.
It's encouraging to know that you actually have more control over your taxes in retirement than at any other time in your life.
Interesting.
You just need to take advantage of retirement tax planning. And if you take advantage of these defensive strategies now, you could save tens of thousands, if not hundreds of thousands of dollars.
That's very interesting. So can you explain how that works a little bit?
Absolutely. Like we talked about, federal income tax rates are at the lowest level they've been in 40 years.
Right.
So you have a short window of opportunity to take advantage of these defensive tax strategies so that you can benefit down the road. You won't have to be paying more in taxes.
Gotcha.
And so that's why we want to make a special offer just for our viewers today.
Oh, right on.
We will show you exactly how you can dramatically reduce your taxes in retirement. So if you've saved more than $200,000, give us a call, 904-694-5910, and we will provide you with a free, customized retirement tax analysis. Again, that's for people who have saved more than $200,000, and that number is 904-694-5910.
That's very cool. Jason, thank you so very much for being here today. That's incredibly cool information. So guys, if you save more than $200,000, give my man Jason Biance a call. All right, so the number's right there on your screen. Once again, thank you so very much, Jason. We really do appreciate it. Hopefully these guys give you a call.